every time there's new regulation, I remember the day that the APR came. So Truth in Lending Reg Z. I don't know if you've seen our 4 boxes when you go finance something, right? Well, I remember when that law passed, our customers thought the industry was dead. They're like, "Oh my God, now we've got to do this crazy calculation and really show them, what the cost of the loan actually is. Are you kidding me? Blah 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 blah." You know what? He- Everyone got through it. Everyone got used to it. It's not a big deal. Same thing with the sort of the new regulation that's coming about, and so Dodd Frank, RESPA, they're all results of these sort of moments in time, and the only thing I can tell you is it's we will survive, and that's where technology really comes to to the aid because we can address these issues, right?
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal Andreino and Ryan MacNeil. Enjoy.
All right, everybody, welcome back. It's episode 71 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, are you frozen as I am or what?
I am frozen. It's been a little crazy. I'm actually just a little icy. It's not super cold.
Yeah,
I guess it's super windy.
it's still cold.
Yeah,
The wind was absolutely howling last night. It's been a crazy stretch.
it is. I live in not a crazy tall tower. It's only 20 stories, but I could feel. I was in the bathroom washing my face, and I started like swaying side to side, and I was like,
My.
I was like, am I like getting lightheaded? And I was like, oh my God, I could see the water kind of move. And I was like, oh my God, the wind's blowing so hard that the building is
That's
moving.
not what you want to be feeling up that high.
No.
Not for me, at least.
But-
Scared of heights, but
Yeah, 100%.
anyways, Neal, we've got some very special guests joining us today. We've got the brass from the mortgage office and applied business software. So I'm going to do a quick introduction here. We're excited to welcome on Carlos Nodarse, the CEO of Applied Business Software, and Nathan Goodhart, VP of Sales for the Mortgage Office. So the Mortgage Office is an award-winning end-to-end loan origination, servicing, and fund management software trusted by the top lenders worldwide. Private lenders, municipalities, not-for-profits, Habitat for Humanity, MICs, CDFIs, SBA lenders, equipment financing firms, franchise lenders, and many others rely on TMO's robust reporting and automation. The platform handles everything from loan origination and document generation to payment collection, loan servicing, investor remittances, and more, covering the entire lending process from A to Z. Carlos and Nathan, welcome to the show.
Yeah, thanks for having me.
Thank you, Neil. It's exciting to be here. Thank you very much for having us here today. We always love to share our story.
I know.
Yeah, looking forward to it. And we chatted about our crummy weather up here on the east coast of Canada, but obviously on a more serious note, obviously that kind of pales in comparison to what you guys were dealing with the wildfires. I assume, are you both based in California, in the LA area?
Yeah, so our offices are in Huntington Beach, California. We were most recently ABS has our offices were in Long Beach for about 40 years or so. And with our most recent growth, we had to find a new home, a bigger home, and so we found a nice space here in Huntington Beach. And so we've been in Southern California our entire lives, and Nate's he's in the Manhattan Beach area, which is yeah. You mentioned the wildfires, and I got to tell you, it was devastating to many here. As a matter of fact, tonight we are hosting a fundraiser with one of our large customers, CV3, and one of our great partners, the Gerasi Law Firm, and Lightning Docs, and we're kind of just getting together tonight, having a few drinks, and do some fundraising. It's been we've been fortunate. We had a couple employees that were affected directly with the fires, but there's a lot of folks out there that have had some very difficult times, and now are having to rebuild, which is going to be very, very difficult. So it's been a tough time. But hey, California, we all have our issues, right? We're strong. We'll make it through, but it's gonna take a little bit of time.
Yeah, absolutely.
Nate, why don't you talk a little bit? I know you're.
Yeah, well, I was going to say you gave us an excuse to decorate our offices, so we only moved in about 4 months to Huntington. It's the first time I've seen pictures on Carlos as well. I got some work to do still.
Love it. Looking good, Carlos.
Yeah.
Yeah, but it's been a journey. I started here actually as a sales rep for the mortgage office about 6 years ago. 6 years actually yesterday. So time's flown by. I mean, to see where we've come and in that time span has been pretty incredible. When I started, we had about a team of 20. So we were pretty lean, and we're family owned, and Carlos is a part of the original family actually. And their story is quite impressive, but I think it was kind of time for a shift. And, about 5 years ago, 4 years ago, we were acquired by a firm that's really been a jolt of life for us. So really at that time, we launched our TMO Pro product, which, it's a web-based application, but, that really sparked growth everywhere in the company, from our development team to our engineering team. We actually built out, and I helped build our first account management team, which is a team just dedicated to working with our customers. We have over 1,300 lenders across the globe, most over 100 in Canada, our biggest market being in the North American market, of course. But, it's been incredible to be a part of the growth. And, Carlos, he started here, I think when he was like 17 years old. So for me, it's like I started at 23. I feel like a mini version of Carlos on the sales side. But Carlos, maybe you want to touch on, Jerry's story and what you've seen through the years.
Yeah, absolutely. And don't let Nate fool you, right? He has skyrocketed here at TMO. It's only been 6 years, but he knows he's done an absolutely fantastic job, which is why he's leading our sales efforts lately. Great. I'm very proud and honored to have him on our team. We're lucky. It's team members like Nate that really make us who we are. But yeah, let me give you a little history on ABS, and it's a funny story, but some people don't kind of don't believe me how it all started. But the company was founded by Jerry and Eddie Delgado in the late '70s, and they're Cuban immigrants who came over and just started, from scratch. And well, one day they decided to buy Jerry's family bought a gas station. Back then it was Texaco. I don't know if you're young enough or old enough to know it, but they bought a Texaco gas station and started to run the business. And quickly they realized, hey, we need software, right? We need computers, and we need software to run just a basic accounting system. This was back in the days where you couldn't go on and order a laptop on Amazon or Dell and get it delivered, right? And so they bought a computer. They went to go find software, and it was almost non-existent. So Jerry decided to teach himself how to program, and so self-taught. Built an accounting system, your general ledger, payables, receivables, invoicing, all that kind of stuff, and started using it for himself. And one day, the computer broke, and so the company sent out a technician to his bedroom, because that's where the company was at that time. And the guy was fixing the computer, and at that time, the story is he asked him, "Hey, what software are you using?" And Jerry's like, "Well, I built my own." And the guy's like, "Wait a minute, you built your own?" And he's like, "Yeah." And so he says, "Well, I might know some people that might be interested in buying the software." And Jerry and I are like, "Okay, well, sure, we'll show it to him." They go out to some guy in Palm Springs, I believe, who's a property manager. Had the same computer. They got in their little Volkswagen Bug and drove to Palm Springs. Showed them the software, and the guy says, "I'll take it. How much is it?" And Jerry and Eddie are like, "We didn't even know what what to charge him. So Jerry threw out $1,500, and the guy said, "Great." Wrote him a check for $1,500, and they were they've told me that they were on their way back home in their bug, and Jerry turned over to looked over to Eddie and said, "Do you know how many oil changes I would have to make $1,500?" And so and that was the start of ABS. And they're like, we're out of the they handed the garage business over to their family, and Jerry and Eddie started what is today Applied Business Software.
Wow.
And they've told me that they wanted the letter A because back then you had to go to the phone book, and they wanted to be at the beginning of the list. And so um, ABS was born, and that was really the start of it. Now, uh, by chance, they ran into um, another customer of the computer company, and this guy was a California mortgage broker, and he had a typical, he originated loans and serviced his own loans, and but they thought, well, maybe we can still use the accounting software to run the loan business, right? Receivables, those are borrower payments. Payables will pay the investors. Why not? And so Jerry and Eddie tried to sell them the accounting system and quickly realized it wasn't really going to be a good match. So Jerry started to write what is today the mortgage office, and that was the sort of the very beginning of our loan management system. And um, that was in the late 70s. I jumped on board when I was in high school. They were looking for someone to write some documentation. I was looking for a little summertime job with some, flexible hours. So I was doing that, and then I saw how successful they were, and I kind of got hooked on development, and that was it. So, you know, I went and got my computer science degree, and took a job at ABS. And back then we were, I don't know, probably 5 or 6, at the company, and quickly started to grow. And we were very successful. We did a very good job, and so we've been in business over 45 years. Um, and like Nate said, about 4.5 years ago, Jerry and Eddie saw the time to maybe retire. They had certainly time for them to sort of enjoy themselves, and so we went through an acquisition, and that sort of really just skyrocketed us into the growth that we've seen over the last few years. We've more than quadrupled the size of the company. Just really, really, obviously we're the PE firm, right? Where everyone wants to see some growth, so we've been pedal to the metal, uh, rocking and rolling, and so um, here we are talking to you guys today.
That's super cool.
Yeah, that's super neat. Carlos, so how big is ABS today?
So we are a tad over 80. We're about 83 employees today, all mostly on-prem here. We do have a Bay Area team. So through our PE firm, we've been, they're fairly well connected, and we've been able to attract some really, really big heavy hitters from. I was able to convince them and show them the vision, and so we've got a few Googlers who left Google and came to TMO. We've got team members from Apple. We have team members from Disney. Just some really, really smart business guys um, that have come on board, and so they fly in and out. As a matter of fact, they come in. The Bay Area team flies in on uh, twice a week, Tuesday and Wednesday, and then fly out. And we do have a small offshore team, but we're sort of reducing that. I've always believed in a work at office environment, and that's what we do here. The collaboration, the sort of the team morale is just, in my opinion, is just the better. And so, and now with our new space, we're, it's been really exciting.
Yeah, 100%.
Yeah, super cool backstory, Carlos. Just to clarify, so is ABS the parent company, and TMO is like the flagship product within?
Yeah. So yeah, good question. So Applied Business Software is the company. The mortgage office is actually our product, the name of the product. And so, but we focus from a marketing standpoint, obviously more from the product itself, the mortgage
And,
office.
and there's been a few iterations too, Ryan, over the years. I think for us, just to kind of show our age a little bit, the owners put Applied Business Software (AB) to be first in the phone book back in the day.
Yeah.
So it's like, we were trying all the tricks and that we could then to get our face in front of people. But another piece too, I think the mortgage office, it's like we kind of started, I don't want to say by accident, but by kind of falling into the industry of private lending. And I feel like that's very common in this space. It's like we talked to so many lenders that were brokers or they were, some sort of investment banking. And maybe, that's kind of something, Ryan, as a question to you, like, do you kind of see that as well? And really the folks that you work with, I mean, how did you, kind of stumble into the private lending space?
Well, Neal and I are both engineers, and didn't last very long in engineering.
No.
So I'd say it's a very wide range of people that fall into brokering and the alternative space. You definitely see less banking background going to alternative versus on the A side or the banking broker side, I guess I'll say.
Sure.
But it really depends. I mean, from an underwriting perspective, I'd say, having that bank experience is obviously valuable. If you're on the sales side, like we kind of are on investor side, it doesn't really matter what your background is, right? Like as long as you've got those skills and something you're passionate about, which both Neal and I are, it can be a good fit. I'd say, from my perspective, it maybe is not the most complex business in the world, but you certainly have to have that fire and that drive if you want to be successful and set yourself apart.
Sure. And it's not necessarily complex, but I feel like there's not tons of information out there available. And it's like one thing that we deal with a lot, like we have a lot of new lenders that call the mortgage office quite often. And it's like our team's approach is a lot different than just here's our software, go and run with it. It's like we really have to get to know their business, but more so we have to be consultants. So it's like I think why folks like working with our team is we've really studied the private lending space, and there's not like an encyclopedia. I mean, there's some things out there like an Investopedia and things that can give you LTV explanations and kind of explain asset-based lending or residential lending and amortization schedules, but it's not really teaching you best practices. And I think that's been something we really pride ourselves on, is that we're really consulting with private lenders on really in both Canada and the U.S. And I think that's what's helped really separate us as well.
Yeah, 100%. It's well said. I think that's a major mission of our podcast here too, is to just educate more people, because like you said, Nathan, there's not a ton of information out there about what private lending is and why it's important to the market, right? And how it's used as a solution. So that's something that we've been really passionate about educating Canadians, at least about, from our perspective. Curious to talk more about the U.S. market. So obviously we're a Canadian focused podcast here. We're very much focused in Atlantic Canada here, but we do, we're moving more towards, Ontario and Western Canada. But the U.S. market is very different than the Canadian market, right? So, we've talked a little bit about this before, but the Canadian market, relatively straightforward. We've got 6 big banks that are the big players, heavy hitters in the industry, got over 50% of market share in the country. And then we've got, on the broker side, we've got a mix of what we call A lenders, which are, essentially monoline lenders who focus on A or bank type business. And then you've got your alternative lenders. You got your B lenders who, will take on maybe that not perfect credit profile, but they want to be in very specific geographic areas, very much urban areas, highly marketable properties. And then you've got your credit unions and your private lenders like ourselves. So I know the U.S. market is much more fragmented. So can you kind of talk about like this complexity in the market, maybe just a quick broad overview of the market and how this ties into your technology as well?
Sure. So I think the U.S. market is very complex, but it is funny. There's a lot of overlay with the Canadian market. I think the U.S. market, it tends to be, you have your core banks that are basically lending under conventional residential loans. There are some banks that will do commercial DSCR type lending. But for the most part, the space that we really play in as the mortgage office is going to be the asset-based, business-to-business type lending here in the States. There's a lot of compliance around owner-occupied type, loans that go out there. So when you actually have residential mortgages here in the States, ever since 2008, there's just been a lot more, regulation around RESPA and Dodd-Frank that makes it a little harder and not necessarily worth it for private lenders to work in. That's a little different in Canada. And I think that we're actually seeing a spike where MICs are becoming more and more prominent for, residential type borrowers. One, because banks don't want to lend on, the increased debt ratios that are happening as Canadians take on more, facilities like credit cards and things along those lines. But then also, we have a 30-year mortgage here in the States that most residents take. I think that that's a challenge in Canada right now, is that everybody's on a 5-year mortgage. So you're going to start seeing a lot more refis. And that's really opening it up for MICs. I mean, that's really an opportunity for private lenders because the big banks are so, have very strong regulatory requirements. So really what we're serving here in the U.S. is really the asset-based lender that's, doing fix and flip bridge loans, lending on debt service coverage ratio, which is the SCR loans. But I will say we actually, it tends to be more, each state has really its own different market. So it's like in Texas, for example, we deal with a lot of like land lenders who are doing a lot of owner-occupied type projects for some of the immigrants that are coming into their communities. So it's like the mortgage office can actually work on some of the regulatory requirements of 10, 30-year loans, which makes us makes it very viable for us to work in the Canadian market because we have a lot of the pieces already put in place that support MICs. So I guess like while there are very two different markets, we do see a lot of carryover. Like for example, here in California, our private lenders tend to be they work like with trust deeds, for example. So they have fractionalized loans on the back end. They'll typically fully fund the loan and then sell off to the investor. In Canada, we deal a lot with syndicators and folks that are doing more larger commercial type projects that will actually put together investors on the back end. So really, for us, it's always we're really focused on the folks that have complex loan structures where you deal with construction draws and different types of interest rates that are tied with like adjustable rate mortgages, for example. But then also on the back end, having very kind of intense investor structures between funds and MICs that we have to support. So I said a lot there, but it's really we're trying to focus better.
Yeah. No, and it was good. Everything you said made a ton of sense. I'm just going to ask a couple questions that popped in my head that I think for some people. So when you say asset lender in the States, an asset lender would be kind of similar to what we label as a private lender up here, where they're more focused on the underlying asset and the exit that you can get from that versus maybe someone's income and credit score.
Exactly. And maybe, every loan's an asset-based loan or dealing in real estate, right? But to your point, it's really focused on the loan to value. So it's less about the actual, really the credit risk rating of the borrower and more so on the potential of the asset, whether, really the after repair value and then what it's currently at and what needs to go into place to really make that asset worth, the ARV at the end.
Got it. So, and that's who you play with mostly. And then this is a super quick one. You mentioned this kind of in passing. I'm just curious because we haven't heard it before. But you said, I think, RESPA and Dodd-Frank, was it?
Yes.
Are those like for us, we have what's called like a FinTrack. Is it like financial tracking and reporting that's required to try and reduce any potential fraud or any risk related to it? Is that what those are?
Exactly. So it's really calling out, it's really based on the Truth in Lending Act. But the idea is that it's really showing the borrower the clear terms around what interest rate they're paying at the end, what they're going to pay in interest versus actual principal. So really just defining all of that. And then also each year, if you're an owner occupied here in the States, you have to do an annual escrow disclosure. So basically every single year you're reassessing for taxes and insurance changes, and you have to alert your borrower ahead of their payment changing. So that's something that, we actually help with down here as well. But I'll say in Canada, like to your point, it's very similar with what's going on with like the new AML type laws and items where because MICs are growing, I would say because they're growing in popularity, you have regulatory bodies like FSRA coming in and really adding more layers of complexity around compliance. And, that's really something that we help with is the compliance on both sides of the border.
Yeah. I didn't realize that there was that much compliance in the States. Not to say that like you guys didn't have it, but genuinely, I didn't because what our perspective is up here, like we've got the movie, The Big Short. And so like,
Yeah.
I feel like our only perspective is just like everyone's
Overtaking,
approved,
yeah.
and there's a million private banks. And so I was like, I would always be like, oh, well, we're like I feel like it's more a thing of complaining in Canada that we have so much regulatory compliance involved in every loan. So that's probably more what it is. And it's not like the States doesn't have it, but it's like Canada's just
Probably
we think
common sense.
yeah, we're at a point now where there's so much paperwork, it adds a ton of cost to underwriting. Like underwriting here now is a huge cost for banks because it's just so intensive to get everyone. And it just seems like every year there's 2 new pieces of paper that you need to get the client to sign and the bank has to sign. And it just never ends.
And we try not to complain about it too much because it pushes more market share our way as a result. But it is challenging for brokers operating in this market, given how much.
I can't tell you, Neal and Ryan. Obviously I've been here for a few decades. And it's I can't begin to tell you every time new regulation, and frankly, typically regulation is the result of some consumer issue, right? So you talk, so like the borrower is getting hurt, the lender's getting hurt. Politicians jump in and they pass new laws. That's how Dodd-Frank really became, and the whole idea is to try to frankly protect the debtor, the borrower, right? And yes, it requires typically more disclosures, more reporting. But I can tell you this: every time there's new regulation, I remember the day that the APR came. So Truth in Lending Reg Z. I don't know if you've seen our 4 boxes when you go finance something, right? Well, I remember when that law passed, our customers thought the industry was dead. They're like, oh my God, now we've got to do this crazy calculation and really show them, what the cost of the loan actually is. Are you kidding me? Blah, 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 blah. You know what? Everyone got through it. Everyone got used to it. It's not a big deal. Same thing with sort of the new, the new regulation that's coming about. And so, Dodd-Frank, RESPA, they're all they're all results of these sort of moments in time. And the only thing I can tell you is it's we will survive, and that's where technology really comes to to the aid, because we can address these issues, right? And so it's
And I guess to clarify too on like the actual like for Dodd-Frank and RESPA, it's really just for owner occupied properties.
Okay.
So it's like, to your point, if you're doing more of the commercial lending or debt service coverage ratio type lending, it still is a little bit of the Wild West. However, there are some like HMDA regulations, for example, where you're tracking, okay, what's the demographic of who we're lending to? But that's really about it. And then the IRS put something into play 2 years ago where if you do 10 loans a year in the States, you actually have to e-file through the IRS. So you're just kind of seeing, more involvement from a compliance standpoint from really both sides. So I think that you'll continue to see more compliance, especially, in Canada as MICs take on more residential type lending.
I will say this, although certainly we're neighbors, and certainly there are different types of transactions, but I can tell you from the mortgage office's viewpoint, where the transactions that our Canadian customers demand that we support are actually very similar to ours, and frankly quite complex. So the syndication, we have customers that have over 100 lenders assigned to a loan, and not only that, but throw on top of that um, sort of progress draws throughout the life of the loan, and lenders coming in and coming out at different times, and then throw in daily rate changes, and that's where things get incredibly complex. And it's actually pretty common in our from our Canadian prospects, and here in the U.S. too.
I have to ask, how is it possible to syndicate a loan with 100 banks?
$1 each.
Well, the example I use,
everyone throws in $1 million. Like, is that what it is?
so these are very big loans, and the mortgage office, we designed it frankly with no limitations. So frankly, you can have 1,000 lenders in our system, and we will track ownership, for each lender on the loan. Our customers, Neal, you'd be they get creative, and our system, it's so flexible that it frankly is used to do transactions that we never ever even thought of. As a matter of fact, Nate, what didn't we reach? There's someone financing cattle. I think.
There's cattle. We have exotic cats that our system finances for. So it can get pretty interesting on what the mortgage office can support.
No way. I saw Domino's is doing. You can finance the pizza. You guys started doing. Have you gotten those yet on there? You got a partnership with Domino's to handle all the pizza financing?
we actually do have some franchisees that use the mortgage office, like Bimbo Bakeries, for example, doing some items, inventory loans. It's definitely unique. We have a lot of
11.
Yeah.
Yeah. It's
One thing I'm curious about. So in Canada, it's always tough to get reliable data in terms of alternative lending. Most statistic estimations have private and alternative lending around 10% of the market here. Do you guys have any sense on how big the private lending space is in the United States?
so. Ryan, it's the same problem here. Quite frankly, the fragmentation of the market. If you look at like the conventional lending, right? Well, they've got all the data because basically they're forced to report, right? And so, but in our space, the data is just not readily available. Now, we've become much better at this, and not just TMO, but our industry as a whole. And it all has to do with activity that's allowing vendors like ourselves to be able to collect data. So, for example, as a matter of fact, we one of our big partners is Gerasi Law Firm and Lightning Docs, and I think they recently they generate loan docs, right, for some of our customers. So they have a lot of data that they're also sitting on about these transactions, and I believe, Nate, I think for January they saw, if I remember correctly, like for bridge loans they saw an uptick year over year of about more than 50%. And on the DSCR loans, I think they saw over 100% or 120%, if I remember correctly, from January of this year to January of last year. So, and we ourselves are also, able to collect data. We've got right now, I think, close to $200 billion in loans serviced through TMO. Our customers, they originate the transactions. They also retain the servicing of these loans, and they use the mortgage office to manage these transactions.
And I think too, I think what some of the change has been is that there's a lot more sophisticated capital coming into the space that's legitimizing the industry. So what I mean by that, like you have companies like BlackRock, JP Morgan acquiring private lenders here in the States, and they require more sophisticated reporting. And in fact, like right now, 18 of the top 50 private lenders in the States actually utilize the mortgage office. So we have a lot of information, a lot of data that we're really looking to aggregate and find opportunities to just help the market on supplying more information. And that's something that our development and product team are really working on. And that's what's exciting about this industry. It's like you don't just have the AI initiatives that are kind of coming in the back end, but you also have, a lot more data and a lot more transparency. And that's going to be something that the mortgage office continues to lead the way on because, like I mentioned, I mean, there's everything from securitizations that are actually being rated now happening in the space. And that's also, we're seeing that in Canada from at least the sophisticated capital perspective where, there's just more programs and bigger dollars coming into the alternative space than we've ever really seen.
That's interesting. What do you guys kind of attribute the growth in the private lending space in the States to? What do you think is causing those huge, like you said, like 100% growth? Like what's kind of fueling that? Like Ryan kind of alluded to it here. It seems like a ton of regulatory is getting in the way. And then also the cost of capital was so high for the last couple of years. It didn't make private seem that expensive. Is it the similar kind of thing in the States, or is there something that's really pushing that?
I think we all have different opinions on it, right? I think a big piece is there's still vacancy issues here in the States. I mean, we have a big influx of folks coming in. I think to your point, the interest rates being very similar to what a private loan could be. right now you get a loan from a bank, even as an investor loan, it's 8%, 9%. It's like you can pay a couple of extra points and be at a 10% interest only loan, or on a commercial loan, and not be that far off from a bank. So we give some of that. I think it's a number of things too. On just there needs to be more building in our country. We just don't have, like, real estate's not getting smaller. Land is being acquired pretty heavily right now. But
our large customers, they're just growing at a very, very rapid pace, and I think a lot of it, like syndications, have some of these big players are just going after sort of these syndicated transactions, which gives them access to sort of cheaper capital, and it makes them very competitive, and the volume is, they could just sort of do transactions that maybe others just can't compete with. But even our smaller lenders, you're talking about very successful, seasoned businesses. They One of the things I noticed from our mid-sized to small lenders is they've got their little niche in their industry, and they focus on that. And that's, they're not out there trying to do everything. They're doing what they're good at, and they know their geography. They tend to stay within a space that they're comfortable with, and they're just the demand is out there, the transactions are needed. uh your typical banks just aren't going to do those deals, and that's where the private lender comes in.
Yeah, cool.
That makes sense.
Just one more follow up on the U.S. market before we move back up north to Canada. Curious if you guys have data in terms of, I'm not sure if I'll have the terminology right, but like the split of private lenders who are like a fund or institutionalized as a fund versus like we call them direct private lenders in Canada, where you assign each loan to an individual investor. Do you guys have a sense of what that split would be in the American market?
uh Ryan, that's where we're still a little blind to this information now. Every day we get better at this, and there are systems out there. For example, for Casa has become very popular, and they're doing a really good job of collecting a lot of this data. But it takes time. There's again, I go back to the fragmentation and all these transactions that are taking place across the country. There's just no central source of truth for these transactions. So it takes companies like Casa, ourselves, Lightning Docs, these vendors that are involved somewhat in these transactions, to start collecting the data. And we're, like I said, we're definitely improving. But I don't really have a stat.
And I guess, like, Ryan, when we talk about the life cycle of a private lender in the States, it's like, they typically start out using their own capital. So they're like, a lot of lenders ask us to get started. How do we do it? It's like, well, make your first loan, prove that you can actually, fund a deal, fund it to yourself if you're a fix and flipper, or it doesn't have to be huge, but start showing yields. It's like, then you start attracting your friends and family into your, whether you're actually selling off the loan or whether you're starting a fund, and kind of, gaining more control, because as a fund, you don't necessarily have to get the sign off, obviously, from each investor. But after you've kind of built either your fund, or kind of, to your point, like a syndicated type loan, then it starts moving into those sophisticated capital sources. So where you can actually start to go and get a bank line. A lot of banks, they will actually have a percentage of their total portfolio carved out to invest in the private lending. So they're not necessarily going to do the loans themselves, but they'll give a warehouse line or a line to a lender. And then really, after you start kind of working with banks and then working with funds, there are a lot of other kind of big capital providers that will buy loans in bulk. And that's what we're really seeing on, the larger lenders are really selling off in bulk to large providers that then they still retain the servicing, but that opens up their capital to continue to go out and loan. So it's really, that's kind of eventually, you want to kind of move into a place where you have a partnership where you can sell off in bulk, to kind of put it all in layman's terms.
Makes sense. Cool. So going back to TMO for a little bit, guys, are you seeing certain features being utilized on your sites more specifically by American lenders or Canadian lenders? Or does everyone kind of use similar products? Obviously, I know there's nuance within it, to your point, like your guys' reporting in the States might be a little bit different than Canada, but is there a specific feature that you're like, we built this primarily just for American lenders because this is something that's common here in the way that they structure their loans or their deals, and you just never see it being used in Canada or vice versa?
I mean, there's certainly certain features in TMO, Neil, that are not necessarily used in Canada. For example, California itself, the Department of Real Estate has quite a sort of a laundry list of regulations, reporting, and things like that. That obviously, doesn't affect even others in the country. There's things like our CDFI reporting for our customers. There's HMDA that Nate was referring to, but when it comes to the blocking and tackling of our system, it's actually very common. They're very similar. As a matter of fact, the majority of our Canadian customers and our prospects, they've got these syndicated transactions with the sort of actual days billings with daily rate changes, which are actually quite complex, to service and manage. We have the same thing here in the States, and so we've some of your AB sort of your AB loans and tranches, all those are complex also to manage. And so when it really comes down to the basics, it's the countries are very, very similar.
Interesting.
And
Okay.
I think some of the items we've built specifically for Canada really focus around like the CMHC reporting for some of our commercial lenders, where you're starting to get more capital coming in from the government to support commercial lending. We have reporting that helps support that. Anti-money laundering. There's a report that's needed for transactions that happen above a certain amount, so the mortgage office can help query that data. So there are some things that we typically have our Canadian focus. We have a product team and some product folks that are dedicated to the Canadian market. And in fact, we've actually hired some folks out of the Canadian market who are now on site here in the mortgage office in Huntington Beach. So that just kind of helps that we have boots on the ground, really kind of studying what's going on and what changes we need to make. And look, I think, working with the mortgage office, some of our success stories when we talk about working with some of the top, commercial lenders like Romspan or Trez or Caravas, it's like we've actually sat down and said, look, what are there items that we need specifically to support your business model? And we've actually executed on, being able to build things out for them when needed as well. So I think we're always kind of learning and reacting to the market because we communicate with our customers who are, our really best source of knowledge too.
That makes sense. Yeah, I guess.
No, we recently we were talking about Nate referred to the IRS reporting on our end. We do support. We always have supported your the CRA T3s, T5s, the NR4 forms, and all the web XML files that need to be uploaded. It's something the Canadian market for us was frankly again something we accidentally ran into. As a matter of fact, way back, a large lender up there their CFO flew down to our offices and spent a day with me, and that was our first sort of exposure to the Canadian market. And then of course, our support of the MIC process and large lenders like Romspan allowed us to sort of open the doors for us. And Canada is our second largest market, next to the U.S. We've always supported it. As a matter of fact, with our most recent acquisition, we're doubling down on our investments in Canada, and we're pushing hard again to dominate that space up there. And so it's always on our radar. We have some really good customers that we support on a regular basis, and so
Sweet.
yeah.
You guys build the tools that are needed. Yeah, and I guess I was also just curious if there's anything that's super different, hopefully, or not hopefully, but outside of regulatory stuff. But it sounds like, to your point, that the basics, the crux of this business, kind of the same no matter where you are. It becomes a little more nuanced to each lender's specifics or some other things like that. But
What was that acquisition, Carlos? Is that a Canadian company or?
Oh no, I'm talking about the our acquisition with our PE firm.
Yeah.
Yeah. It's we just obviously have access to more resources than we did before. So so we were able to to invest more time and money and we're doing that in our Canadian space.
Very cool. Good segue to my next question. So just curious about, from a marketing perspective, how do you guys go to market in terms of targeting private lenders, and does your strategy differ in in Canada versus the United States?
Sure. So I think our big focus is always they're very similar. I mean, if you look at what interests both sides, I mean it's very similar. I'll say one of our big focuses has always been keeping the Canadian market in Canada. So what I mean by that, we actually have servers that are hosted in Canada. All of our Canadian customers' data is hosted in Canada. That's a big deal because not all software providers go to that extra length to support the Canadian market or the U.S. market if they're playing in both areas. But for us, I mean, we always go to conferences. We try to visit at least several times per year to our customers. In FaceTime is invaluable. I think what's nice about this space is we have a pretty nice kind of idea of who's a private lender. So it's like in our 45 years, we really know all of the private lenders in both Canada and the U.S. at this point, and we have tools in place that allow us to track, new lenders that are popping up. We go to Simba and kind of track all the private lenders and alternative lenders that they post. So I think for us, it's really just trying to get in front of them and explain, look, this is what we're seeing in the market. This is how we're helping our customers become more efficient. So we actually don't rely heavily on just our marketing channel. We really have dedicated, folks that are account executives on both our new business team and our account management team that are just constantly trying to reach out and stay in touch with each lender. So I would say it's a similar approach. I will joke, we in the office we do have a Canadian hat, so instead of a fractionalized loan, it's syndicated. It's instead of Trudeau, I guess it's Trump now. So, but no, so we do have some terminology that we teach and treat on. And it's funny, I feel like now it's actually becoming very similar. Like it used to be called loan administration in Canada versus loan servicing. It's like now I think it's this kind of route. Like I think servicing is kind of taken over in both markets, but we do try to make sure we're speaking to our audience correctly.
That's cool.
Nice. Make sure you only come up here in the summertime, eh? That's
June.
I made that mistake.
June to October only in Canada.
I'm from Ohio, so it's not much different,
yeah.
But coming to Los Angeles, I don't think I'll look back. But
so I guess within that, what do you find the biggest challenges once you have someone that's interested in the product of getting them to actually get fully adopted and onboarded? Like I know that people get used to their own systems and they're like, yeah, we really want to use you guys, but we're so afraid to even spreadsheet and actually move to something a little more formalized.
Yeah, well, it's actually funny. I mean, we kind of joke internally, like our biggest competitor is Excel, because it seems like every private lender has a scary Excel spreadsheet that's running their business in some instant. But no, I think that we, it really depends on who we're working with. I think for us, you have to have a dedicated resource on your end that's going to adopt new change. So what I mean by that, it's like, when's the best time to get a new software system? Never. It's like your operations are never going to get slower. Usually you're reaching out to us because something either broke in your current system or you're looking to scale and you really kind of want to take things to the next level. So it's like the most successful customers that we have realize that they need to dedicate resources on their end to really put time and effort into rolling out the system. And they do so a lot of times by really bonusing or really working with their team to say, look, if we stand up the system, everybody will, get some sort of, incentive to do so. One that we provide, actually, we bring our clients a lot to our Huntington Beach office. We actually do a seminar every month. So it's like a lot of times we'll just include that with our new customers to say, hey, come on, meet the team, get everybody kind of motivated to learn the new system. But look, from our internal resources, we have an entire onboarding team. We have a support team. We have folks dedicated to be your project manager to help stand you up. That's the nice part about software is like, in a year, you're going to have to renew. So it's like at that point, we better be working within that year timeline of really helping be a resource to stand up, our system. And, for the most part, if you have dedicated resources, you have the buy-in from your team, you're working with us on the resources that we provide, most of our customers are up and running in less than 30 days. So it's really just a matter of, really meeting a nice time frame on your end to say, let's go ahead and move forward with that.
Lean on the resources you guys provide to help get through the pain point.
Absolutely.
Yeah.
Yeah.
I can't say enough about having a champion on your end to make this successful. I guarantee you, if there's no effort on the customer side to get the system up and running, it just won't happen, right?
Yeah.
I've seen that story a million times, but you have that, the right team on your end, you're going to get it up and running very quickly. You won't even look back, right? You won't even realize. We hear it all the time. I wish I would have done it sooner, and so it certainly. Hey, we buy software too, right? We changed our CRM. We went to HubSpot a few years ago. I can't begin to tell you the resistance I was getting from our sales team, and not you, Nate, not you, Nate. But it was difficult, but now absolutely beneficial to us. And
Now it's like we couldn't run our business
yeah,
without HubSpot at this point. So it's like, we've been part of change as well on our side. And anyway, I think it is tough to be a buyer of loan servicing administration software, just because there's a lot of cheaper systems. They're month to month. They kind of say everything that they solve all of these problems, right? And no system's going to solve 100% of your challenges. But it's like, if you can get somewhere within that 80 to 95% range, then that's the system that you should really move forward with. And I think that's the biggest thing, is you have to change some of your process. That's why you're getting a software. So anyway, I think that's what we run into, but we seem to do pretty well. We have a great onboarding team.
Yeah,
Um,
that's a great point, Carlos. That resonates with me. I've been through a lot of tech changes, not just in this industry, but other industries. And you're absolutely right. It's always met with resistance, but if you do have the appropriate champion in place, it makes it so much smoother.
yep,
Yeah.
yeah. We see it all the time. It's and the ones that do are always successful. It's always, and it's great to work with them, right? Though, because they enjoy the system, they benefit from it, and those become they become your best referrals, your best customer, and
Absolutely.
so it's a win-win for both of us.
So just one more before we wrap up, and then we're going to hit you guys with the bonus question. So both of you, what do you love most about this business?
Oh, you know, I think for me, guys, this is all I've done my entire adult life, right? Since high school, and so you might think, well, it's Carlos, are you bored? And I can't begin to tell you how that is further. It couldn't be further from the truth, right? I love the challenge of this space, software in general, right? I'm a developer at heart, and that's really how I started. I love programming, although obviously I don't do much of it anymore. I'm more, obviously I guide the company and the vision of the product. But I love all the new technology, having to sort of uh, you know sort of deal with new demands from our customers, even our TMO Pro product, right? Our desktop product had been around for over 3 decades, and it's super successful, very reliable. You'd think we'd be able to build our Pro product with no pain at all, and it was a lot of work, right? It was a lot of work even to convert a seasoned application to a web product. And as hard as that was, it was fun. It was fun because we now get to do things that we couldn't do before. So that's what drives me. And then obviously, the success working with guys like Nate. Like, I come here every day. I love our team. The morale in our company is sky high because we just have a really good group of teammates that just really get a kick out of doing well. And so that's what that's the best part for me.
Yeah, I always wanted to get into some sort of real estate and sales, and the mortgage office kind of just came full circle for me. It combined both. I think what I really love is working with customers that are kind of either starting, or they've been doing it a certain way for a while. They've got it gotten their ground, but now they're looking to go to the next level, and actually being a part of their success story and helping them, trade up on our system and just become more efficient. I think one thing we've done well at the mortgage office, we're very well connected with different law firms and different, CPAs, and we can really help folks to get in touch with the right people, and being able to look at our customers and just see them succeed with what we've put into place has been pretty rewarding. But yeah, I think that that's something that we've that drives me every day. Is I love working with our customers, and then to Carlos's point, it's like we have an amazing team. We're right across from a mall. It's like we're always doing happy hours, or just hanging out outside of work. We have a fun Christmas party. Tonight we're doing a fundraiser, and it's just like we're always staying busy, and I think that that's me. I like to keep busy and not be sitting on my hands waiting for something to happen. There's always fireworks going on at the mortgage office every day.
You guys are doing a happy hour more frequently.
I know, right? It'll keep you guys warm.
Yeah. Neal, anything else before we hit them with the bonus?
No, that's great. You guys have honestly provided a ton of information.
Great, guys.
It's honestly changed. Like, I'm always paying attention to the States, so it was really interesting, and you guys are really informative in the way in sharing it that's actually consumable for me, and I'm hoping all the listeners.
Yeah, absolutely. So bonus question here, Nate. I think you might know what's coming, but we like to ask all of our guests what the best pizza is in their town or general area. Okay, so we haven't. I think we haven't had any American guests on yet. So let's stay to LA or the general area that you're in, and I'll make it a two-parter. So I've only been to LA once, but it was years ago, and I've heard that the food scene there is incredible. So maybe give us your favorite pizza spot, and then one other spot. It could be anything from a food truck to a high-end restaurant. So we'll leave it with you guys to give us a couple of recommendations here.
Yeah, no, that's a tough one, because I got to say, being from Ohio and out east, like, Carlos, don't hate me on this. I don't think the West has good pizza. I mean, I'm gonna get some flack for that, but there is a good spot. We always go to Buono's here in Signal Hill. We love Buono's here. But then I really think you got to go with Mexican when you're in California. So there's a couple of great spots. Just across the street from us is actually Mark Wahlberg's restaurant. It's called Fletch Out. So we've consumed a couple of margaritas over there and tacos too. So that's a great spot.
I'll tell you, Ryan, I happen to know, so I'll make this short, but a good friend of ours that we met through my son's high school, they happen to own they own several family Italian restaurants. They have one left, and it's in La Habra. And I can personally tell you, because I know how fresh that food is, because I've seen it. They to me, there's nothing better than the food they produce. Anything there is absolutely fantastic, including the pizza. If you're ever here, or if you're the place is called Gondola's Pizza, and it's a like I said, it's a family run business, and their pizza is spectacular. My son, every time I ask him, hey, what do you feel like eating, he's like, let's go do Gondola's, right? And he loves it. I love I love sushi. My wife and I love sushi. We do sushi every Friday. We've got our little spot that they've got really, really, really good stuff, and so. But I'm not picky. I'll eat pretty much anything. We got good food. Yeah, we got good food, maybe.
More on that. Couldn't agree with you more. What was the name of the sushi spot?
It's called Fish in a Bottle. If you're ever, if you give me a call a little bit ahead of time, and I'll let the owners know you're going over there, and you'll get the special treatment.
Love it.
Nice.
Love it. Well, that's great, guys. We really appreciate your time and insight here. It's a great conversation, and thanks again for coming on.
Thanks so much for having us, guys.
Yeah, thanks a lot for doing this, guys.
Thank you, Neal. Thank you, Ryan. It was fun. I really appreciate it. Thank you very much.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan MacNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.